Piece of economic news came out of Berlin this morning that caused economists to scratch their heads and take their glasses off to make sure they were reading it right. German investor confidence has increased the most in more than 15 years in February after the German government stepped up efforts to bolster the economy, as well as the signal from the European Central Bank that it will cut interest rates to a new low. The ZEW Center for European Economic Research said its index of investor and analyst expectations rose to minus 5.8% from minus 31% in January. That's the biggest gain since 1993, and it's at the highest level since July of 2007. Economists surveyed by Bloomberg News expected an increase to minus 25. Instead, it went to minus 5.8. The European Central Bank policymakers say they have room to cut borrowing costs further as the euro battles its worst recession since World War II. German Chancellor Angela Merkel's coalition in January agreed to spend about $102 billion U.S. over 2 years to boost the German economy. This is the biggest boost in the 16-nation euro bloc. Germany's benchmark DAX stock index declined as much as 2.3% today, bringing losses for the year from 2009 to 10.8% this year already. Some news from Bermuda-based Lancashire Holdings. They're blaming hefty hurricane damage claims for a 75% drop in 2008 profits. However, those earnings still beat forecasts, and Lancashire said it plans to start paying dividends within a year. London-listed Lancashire also said it expects insurance prices to rise strongly this year. The company made a 2008 pre-tax profit of $97.6 million U.S. Analysts had expected $59 million in profit. 2008 was one of the toughest years that many of us have experienced in the insurance industry. This according to Lancashire CEO Richard Brindle. To grow book value per share by 7.5% is a considerable achievement. Lancashire has achieved an excellent combined ratio of 86.3%. Mr. Brindle went on to say that the market has undoubtedly turned, as in 2006 we expect the rate increases we've seen in January to gain momentum as the year progresses. Down the street, Bermudian reinsurer Flagstone Re reported net losses for the fourth quarter and for the full year. Flagstone said that net loss for the fourth quarter was $75 million, down from a net income gain from the same period last year of $75 million. Net loss for the year ended 12/31/08 was $187 million compared to net income of $167 million for all of 2007. Like its Bermudian counterparts, Flagstone's results were heavily impacted by cat losses and the decline of investment returns. According to Flagstone, cat losses from hurricanes Ike and Gustav jumped to $140 million at the end of 2008, up from $115 million in the third quarter. Apparently as well, their combined ratio was 89.4% for 2008, up from 72.8% in 2007. In some broker news, Tysers, the London broker, said it has appointed special Caribbean broker Neil Allen to its North American and International Specialty Division. Allen has been working in the London market for 21 years. He was previously with Cooper Gay for 18 years, most recently as Executive Director of the Non-Marine Division with responsibility for the Caribbean region. News from Trieste that Generali executives are mulling the buyout of the 49.6% stake in Italian insurer Alleanza Assicurazioni that it does not already control. Generali said the timing for such a deal has not been decided yet. The Italian insurer said, quote, "At this stage it is not possible to predict if, by which term and at which conditions any such transaction, which would in any case not entail any right of withdrawal for the shareholders of the companies involved, might be presented to the boards of directors of the two companies. It sounds like it was written by a lawyer. The Trieste-based insurer is going to report its full-year results on the 20th of March. Sometimes you hear about mid-air collisions and you sort of can't believe that because there's such a whole amount of space up there. When we saw the collision of the two satellites over Siberia last week, that's another head-scratcher. But when you go to the beach and look at the broad blue ocean, it's sometimes hard to imagine that two ships could collide. Here's a story of two submarines colliding. Nuclear-armed submarines from Britain and France collided while on separate patrols in the Atlantic Ocean earlier this month. The first British Sea Lord, Admiral Jonathan Band, said there was no damage to the vessel's weapon systems during the incident and there was no compromise to nuclear safety. No members of the crew were said to have been injured when His Majesty's ship Vanguard, Britain's first Trident-class nuclear-armed sub, and the French Le Triomphant submarine, which was also nuclear-armed, ran into each other. British newspapers had reported that the submarines were badly damaged in the collision and returned to port. The British sub, the Vanguard, went into operation in 1994. It's one of the UK's 4 nuclear-powered submarines. Both submarines are capable of carrying up to 16 nuclear-armed Trident missiles. Back on February 6th, the French Defense Ministry said in a brief statement that Le Triomphant had struck a, quote, submerged object during a return from a patrol, damaging the sonar dome in the front of the submarine. The French Defense Ministry did not confirm the date of the collision, nor did it make any mention of a British sub. It did say in a statement that no crew members were injured, and confirmed as well that nuclear security of the submarine or its missile systems had not been compromised. After the accident, the French sub returned to its base on the western tip of France under its own power. I thought they had sonar on those ships. I guess they didn't have it turned on. The stock market is down about 260 points now. We're at a level of 7,591. We have the interview with Sue Langley from Lloyd's on Thursday. If we have any breaking news, we'll come back and tell you. Thank you for watching.